Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And we're going to talk about a trade right now that I've been working on for a month, and I'm real excited about it. I think it's simplified to where I was trading with 5 or 6 different moving averages. I still have my chart patterns, but I'm using 2 different kind of time frames, and maybe 3 if I need to. So let's go ahead and talk about it. Sneaky snake breakout, pullback, boom. So we had a channel, we had a breakout, we had a pullback, and we had a boom. I had candlesticks telling me the story that was going to happen in this trade. When we developed the channel, we were able to go ahead and scalp this channel from within a couple minutes at a time. As the time it pulled back, I would get back in it and run it to resistance. Pull back, run it to resistance. Pull back. Then we had the breakout. We had the crossover, and we were bullish as long as we stayed above that 10. Then we created another flag right here. We had what's called wedge. Wedge hit the 20, bounced off the 20. So once we broke past the 10, we had the crossover from the 10 from the 20. We were able to stay in that trade if you could. I didn't. I wish I would have, but I need to kind of stay in these trades longer and identify when to get out a little bit better. But so far I've had I had two 100% days last week. I had a 92%, I had an 85, and then I had a 79 on Friday. I made a few mistakes on Friday. I had about an 85% until I tried to catch the knife. And that was a bad thing. That was too risky of a trade. I told myself, and this is what I got to get to break the habit of getting complacent. Because once a trader builds up a certain amount of confidence, unless he can maintain discipline, he can make mistakes. And that's what I did. I didn't maintain my discipline. I kept telling myself all day, I'm going to slow down a little bit, and then all of a sudden, there at the end of the day, I seen this big knife, and I wanted to take advantage of it, and I got stuck in it. So I lost $200 on that trade. I think altogether, those 3 bad trades I had, I lost probably about $500, $500 or $600 that I could have made that was profit. That's what I mean. I could have ended up having a $1,300 day. So we're going to clean this out, and I'm going to show you how I draw these out. Clear the drawing set. So this is the first thing this morning. I mean Friday morning. This is not the other trade that we're talking about. So here we're going to draw the trend lines. How I draw the trend lines is using the bodies of the candle. The wick is a confirmation, and I tried to look for an equilibrium when I'm looking for these bodies where I can get as many bodies touching at a time. So right across here, we're going to go ahead and draw the snake. Go to my toolbox and look for my channel, and I'm going to simply just go in here, and I'm going to draw to that body right there, and I'm going to go straight across. Then I'm going to come down and I'm going to touch that body right there. So now I've got what you call a Darvis box. It's a little bit going down just a little bit at an angle, but not very, very much. And this is called a channel. And once you find a channel, you can start calling these trades out. So we had a double bottom counting the wick. I started drawing it from the bodies on the top, went from that body to that body, and then extended it on out. Same as down here. I went from that body and extended it on out, and that caught the wick right there. So as we were going across, if you can count to 3, you can trade for me. In every pattern, there's a sweet spot. It's between the 3 and the 4. So we hit here on the top of a triple top. 1, 2, 3, with a double bottom counting the wick. This could also be almost a wedge coming down, or a megaphone, one or the other. but for right now, resistance, wick, resistance, resistance, wick, resistance. And we got a wick right here. So you got a 1, 2, breaks up a little bit, 3, boom, 1, 2, 3, 4. Not counting the wick, it'd be 3 bodies. That's all you got to learn how to do is count to 3 and count to 4. And if you count to 5, you might take a nosedive. So as we started to break out of the channel, we pulled back. We noticed that the 10 had a crossover right here across the 20. And it respected that 10 all the way up. And then it came down and touched the 20 again. So we're going to extend this out to the right. And then she had a kiss right here. The 10 kissed the 20 and stayed above that 20. So you could have got into that trade right here. We have an inverse head and shoulders. Right there. Left shoulder, right shoulder, boom. Comes back and respects the 10 and moves on up. So this could have been a trade that you could have scalped. Spinning top, inverted hammer, and then another doji, almost like a spinning top, respecting that 20 all the way up to a double top, triple top, and get out of the trade. Body, wick, body, 1, 2, 3, you're out of the trade. Comes back down, creates a double bottom, then you have a 1, 2, 3, 4, counting the wick. And she breaks out of the sweet spot. Then we have what you call wedge. This is on the 2-minute time frame. So we had a little wedge right here to the 20. She breaks out of the wedge, pulls back, and then you have your breakout. Boom. Came back and touched that, respected that shoulder line of that head and shoulders, inverse head and shoulders. Breaks out, still in the trade, holds above the 10, and then you finally decide to go ahead and get out of the trade. Eventually, I mean, you could have got out of it a long time ago. So that's the first channel. And notice the top of this resistance of this triple top came back and found support, which is a double confirmation off the 200 SMA. Bounces off the 200 SMA and you have another breakout. Then you have another crossover. Starts to respect the 10 all over again. Real simple to follow. As the 10 came down and touched the 20, you're still bullish in the trade. Unless that 10 starts to drop down below the 20, then you want to go ahead and get out of that trade. But we held that 10 and we held the 20 and we had 3 white soldiers. And every time I see 3 white soldiers, I'm out of the trade. And then I tried to play the 3 black crows at the end of the day and I got screwed. That was my bad trade there. One of my bad trades. Don't ever want to do that. So we have what you call a new channel right here. You could take this and run it all the way down to that. Then you can take this and run it all the way down, or even to right there even. And that's what you call a wedge. And this wedge went on for a long time. But the fallen wedge started to squeeze, and then once you hit that previous resistance line of that other channel of that snake, and we also hit the 200 SMA, that was a good buy signal. Buy signal. And then she breaks out. That's real strong. It's called a wedge, a falling wedge. And as the resistance gets lower and lower, and the support gets lower and lower, and they squeeze, then you can tell that this thing's about ready to break out. And that's when you want to call it out. We also had a little expansion pattern right here. That's called a megaphone. 3 white soldiers, you're out of the trade. Snake, breakout, pull back to the 20. So you had all kinds of opportunities to scalp this trade on the way up. As you're still maybe long, or you scale out, you keep 1 or 2, and you can buy the dip. We have another wedge right here. This is on the 2 minute. If you can count to 3, you can trade with me. So we got 1, 2, 3, breakout. Pull back to the previous resistance, take the trade. That's called a dragonfly doji right there. Inverted hammer, inverted hammer, inverted hammer, inverted hammer, or spinning top, all bullish candles. So this is another wedge on the 2 minute. You could take that trade. Once it breaks out, wait for the pattern. She pulls back to the previous resistance. And then you see that it respected the 20. And that was your time to jump in this trade. Boom, 3 white soldiers, you're out of the trade in 6 minutes. 3 black crows, that's what I tried to take, this double bottom. I got stuck. It knifed on me, practically went to 0. I added on, and then it got caught. I got caught in it. I got out at 50 cents. My average was like 145 or something like that, 140, 135. So that's just one day. Then we had that real bad sell-off the day before. So that's the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And the moving averages is the 10 SMA, the 20 SMA crossover, and the 200 SMA for support and resistance levels. And as the 200 starts to climb, the stock gets more bullish. That was a good spot to take that trade right there. It was perfect to take that fallen wedge, hit the 200, hit that previous resistance level. There was 3 reasons to take that trade. 3 reasons. And that's real good, counting the fallen wedge. I'm the sneaky snake master strategist that talks about chart patterns, moving averages, and being in the now. Have a great day.